We need to talk desperately about Tesla stock. Now, I understand most of us were long-term investors. Some of us have trades on Tesla. Some of us have our own different strategies and plans with Tesla. Tesla stock has now been read 10 out of the past 11 trading days. It has been off the charts bad, okay? I didn't forecast this. I don't think anyone forecasted just 2024 to start as an absolute SHIT show for Tesla stock. What we just got yesterday opened the door for a lot more downside. And I want to explain that here in this video. That was Tesla cutting prices in China. That's a massive problem. Now, unfortunately, we have a couple other problems as well. We have earnings season that will start here shortly, coming next week. We'll get more companies. And then by the 2nd of February, you're going to have all of your big tech that has reported earnings. Apple tends to be one of the last big tech names that reports earnings. They report earnings Thursday, February 1st. And then February 2nd is Friday. And by that point, you're going to have most of the S&P that has already reported earnings. Well, in light of earnings that are around the corner, the 50 Cent trader is back. No, not 50 Cent the rapper. He does not trade stocks, at least that I know about. The 50 Cent trader. He's an infamous, mysterious trader that trades the VIX, which is the volatility index, the CBOE volatility index, at just the right times. Mysteriously, kind of knows things, if you will. And he has now made a new trade, a bearish bet on our markets. And I want to share this with you guys. I was actually, I usually have like Bloomberg or CNBC on the TV in the background. And today was Bloomberg. And they were talking about the 50 Cent trader. Now, I've been in the markets for a long time. The 50 Cent trader became more relevant around 2015. The people started to notice the trades. Around 2017 is when I first learned about the 50 Cent trader. And it seems like every time things are about to change, he makes a trade. And he has made a trade today. And I will share that trade with you. I did also make a trade as well that is pretty close to his before I even heard the trade. So we're kind of thinking along the same lines here. So we have a lot to get into. This is going to be just an open, honest video about Tesla and where Tesla stock could go next. Unfortunately, things are not lining up as I expected, but I think the silver lining is 2024 still should be a good year for Tesla, especially the second half of 2024. And we'll explain what needs to happen for my base kind of price target of $450 to actually become a reality by the end of 2024. And yes, it still is possible. So we'll get into all of that information here in this video. I think this is a video everyone needs to hear. So if you like the perspective or honesty or insight that is provided here in this video, hit that like button and subscribe to the channel. That helps push this video out to as many people as possible. And let's get started. So I kind of already gave you guys the backdrop of what we're going to talk about here in this video, but Tesla cutting prices in China really opens the door for continued downside. And why that is because China actually in Q4 had better or more deliveries than the US. If Tesla China is cutting prices in China, then there is going to be this overhang of when are we going to get a price cut in the US? If China's cutting prices, the US is likely to cut prices as well. And that is bad news for Tesla stock because no matter if it's a week or 2 weeks or 3 or 4 weeks down the line, investors are still going to be saying, hey, Tesla's probably going to cut prices in the US. So this is a midterm overhang on Tesla stock. Now, fundamentally speaking, Tesla cutting prices in China also takes down the EPS estimates about 10% for next year, specifically like 7 to 10%. That's bad right now for Tesla stock. And that's why Tesla, including the move in after hours, is down over 4% today. As you know, we also have Tesla's Q4 earnings. An earnings call on January 24th. I think it's pretty clear Tesla's earnings are probably going to be good. Tesla just raised The next big catalyst for Tesla specifically is going to be Tesla's earnings on January 24th, when we get Tesla's earnings themselves and the earnings call. Now, I think the numbers for Tesla are going to be great. I think they're going to be better than expected. Tesla ran down their inventory of other models. That could be the Cybertruck, the Model S, the Model X, by about 5,000. So that's good. That should be very accretive to margins. You should see margins okay, or even improve. Wall Street generally is expecting margins to fall. I don't think that's going to be the case. So I think margins numbers overall are going to be very positive. The biggest risk coming on January 24th is Elon Musk. The last couple of quarters now, he's been very doom and gloomy on the economy, which really has not gotten investors excited. Now, other companies like Apple, for an example, Apple should not be where it is today. It only is because they are so meticulous about questions from analysts, about earnings calls, about their guidance, that even if Apple puts up bad numbers, I mean, their growth has been negative 5 quarters in a row, they somehow have a way of smoothing things over on the earnings call. It's kind of the opposite with Tesla. Tesla reports good numbers or bad numbers, doesn't even matter. Usually good numbers. Tesla usually beats estimates. And then what happens instead of smoothing things over on the earnings call? I mean, Elon just chops the head off with the machete, right? That's kind of how it feels over the past couple of quarters. So that is another risk for Tesla. But I actually don't think these two things, another price cut for the US or a bad earnings call, is really the biggest problem we have right now. The biggest problem for Tesla right now is the fact that Tesla has fallen so aggressively recently and markets are at all-time highs. Yes, the S&P 500 hit a new all-time high today. If you're looking at the SPY at least. The SPY includes dividends. The SPX does not. So the XPX, the S&P 500 itself is not at all-time highs. SPY is, including those dividends. So you hit that today. Odds are you fall from here. After the rally we have seen, odds are you get a larger correction. Even Fundstrat, that is projecting about 10% of an increase in the SPY in 2024, but they think small caps could rally 50%. Well, Mark Newton just basically said the S&P is going to fall 7 to 10%. So Mark Newton, he runs or is the chief market strategist, technical strategist at Fundstrat. He says, our October, late December 2023 rally might require a 50 to 61.8% retracement before pushback to new highs can occur. My bias is for lower prices over the next couple of months before another rally back to all-time highs can get underway. So you're at a moment in time where Tesla has already gotten destroyed. If the markets fall from here, Tesla is going to get hit even worse. Tesla tends to have about a 2 beta. So that means Tesla tends to outperform about 2x what the markets do. Tesla tends to underperform about 2x what the markets do. So theoretically, if the S&P 500 falls another 10% or so, even if we don't get any more bad news, no more price cuts in the US, no more anything like that, if the markets fall 10% and go through a correction, Tesla stock could find itself at $175 per share. Now, where I think I was wrong in the start or for the beginning of 2024, I thought capital was going to come back into our markets. I thought investors would want to get reallocated to stocks. I still think that general logic is true. I think people need to get back into stocks. I think people will get back into stocks. But I did not expect the selling in Tesla stock the way that we have seen it. I honestly didn't expect recession fears to be so obvious, not obvious. Nobody's really talking about a recession right now, right? In the grand scope of things, a lot of people are pretty bullish on our markets, analyst-wise. But the bond market is saying we're heading into a slowdown and or recession by the way that they are pricing in so many cuts to Fed funds rates in 2024. This under the surface is having a very negative impact on interest rate sensitive names, on small and mid cap stocks. IWM is down almost 4% in 2024 alone. It's the 12th day of 2024. That is a very bad start to the year, whereas the S&P is pretty much break even for 2024 so far. So the markets are once again becoming top heavy. What happens next? Every time this is going to be the case every time the markets are top heavy. Top heavy means Magnificent Seven stocks controlling the markets. What do you see? You either see a catch down or a catch up. A catch up would be the broad markets catching up to what, the S&P has done. That's why you had the outperformance of small cap stocks towards the end of 2023. I thought, honestly, that would continue, right? Interest rate sensitive names. Or a catch down is big tech falling to match, what a Tesla's already done, right? That'd be like Apple falling and Microsoft falling and Nvidia falling and Meta falling. So one of those things is going to happen. But what you're seeing under the surface, long story short, is not exactly great news. For the S&P 500 itself, markets are pricing in or expecting about 11% earnings growth. That is high for a normal year, a year of no recession. 11% growth in earnings, that's a lot. Let alone a year in which it's a toss-up whether or not we get a recession, when we're going to be getting Fed rate cuts, when Fed funds rates have just seen a rapid increase, and we just don't know the full effects of Fed policy at this point. What about the balance sheet? What about what's going on with the Red Sea situation or geopolitical tensions? There's so many risk factors out there, but markets still have very high expectations for S&P 500 earnings. If those earnings do not come in around 11% growth for Q4, well, markets are going to say, well, stocks are too high. And you will see a lot of selling based on that. And that will, we typically see, abnormally have a larger effect on Tesla than even the broader markets. Again, if the markets fall 10%, Tesla's probably going to fall 20% or somewhere in that neighborhood. And considering Tesla's already been getting destroyed, that's going to be another building block to put on the weak foundation that Tesla has to start 2024. That's a bit of a problem. And just to make matters worse, Q3 GDP was 5.2%. That's the number. It's finalized, 5.2%. For Q4, we're expecting GDP to be 2.2%. The next update we will get is Wednesday, January 17th. And you're high right now, right? So if growth comes in, not as good than what we're expecting, then you get more fears of a recession, and that's also bad for stocks. Now, the infamous 50-cent trader is back, okay? Now, let's just run through a little bit of context here. This is a simple Google search. You can see February 16th of 2023, 50-cent trader may be betting big on a surge in market volatility. You got to remember the VIX tracks S&P 500 puts to calls. So when the VIX is low, like right now, the VIX is trading at some of the lowest points it's been at. This is a weekly chart. At some of the lowest points you've really ever seen. Typically, when you're at a low point, you tend to spike anyways. So that's not like rocket science. It's not a crazy bet. But the VIX could go lower than where it is. The VIX is currently at $12.53. Now, if you see more puts being bought on the S&P, the VIX spikes because of stocks falling, people rush to buy protection, right? The VIX spikes. The more that ratio is, let's say there's a 5-to-1, there's 5 times as many puts being bought than calls, and the stocks are falling, well, the VIX is going to rocket higher. And the VIX can make big moves. It can go from 12, like you've seen during the Rona, around 11 or 12, to 85. Just in 2022, 2023, you could see the VIX go from 17 to 30 or from 19 to 35. That's kind of the movement that we've seen during 2022. And some points in 2023, we had 2 big VIX spikes. Back here, when this trader made the bet, the 50-cent trader, the VIX was around 16, 17. The VIX spiked to 31. So he was correct there. Most recently, the VIX, and he also bet on this one as well, the VIX went from 13 to about 23. So it's been a while since you've actually seen a spike in the VIX because stocks have been doing well and a lot of people have been buying calls. Now, again, he tends to be in the right place at the right time to make the right trade. Now, there's articles going back to 2017, right? It says 50 Cent trading mystery focuses on a $20 billion London fund, hedge fund. So we don't know who this is. That's the craziest part. It could be someone in London. It could be the United States government. Who knows what it is or who it is? Let's look at this trade from February 12th, 2018, during the whole China trade war situation, kind of like a black swan event that just happened really out of nowhere. And stocks fell about 20% within a 2-week time frame and bottomed right before Christmas. That was the December crash that was not great. This article says the mysterious trader nicknamed 50 Cent made $200 million last week as the market blew up. Now, this trade was about 50,000 contracts. You can see if we can find the right here. It says market participants called the trader 50 Cent due to his or her penchant for paying a fixed 50 cents on 50,000 VIX contract call options trades. The 50 Cent moniker is in reference to the nickname of American rapper Curtis James Jackson III. It says call options are derivative instruments betting on a price increase for a specific index or security. And you can see 50 Cent cumulative P&L since 2017. It's up like $200 million in this time frame. And specifically that trade was, a huge winner. Okay, I believe he only paid what? I can actually do the math here. 50 times 50,000. He paid about $2.5 million for that trade. And got paid out big time, okay? Like $200 million of that. So that was a wildly profitable trade, $2.5 million into $200 million. That's like a, 80x gain? Well, he's back again. This says VIX trader drops $17 million on a bet that the eerie stock market calm won't last. A trader bought about 250,000 call contracts on the VIX index, so a lot more, with a strike price of 17 that expire on February 14th. The trader spent $16.7 million in premium, with each contract costing roughly 63 cents to 67 cents. The VIX hasn't traded above 17 since early November. Quote, it's hard to know if it's an outright bearish bet on the market or an aggressive portfolio hedge after a big move, said Steve Sosnick, chief strategist at Interactive Brokers. Either way, it expresses concern that we could see a bit of a pullback during or after earnings season. So he's basically betting the VIX goes to about here, about 17, which really in the grand scope of things would not be that hard to do. Now, I heard this on the TV in the background, and I didn't hear the exact trade or anything like that, but I know the 50 Cent trader. It's been a long time since I've heard that term. So I figured, hey, that logic makes sense. I'll go ahead and go into a similar trade. I coincidentally picked February 14th and bought the $20 VIX calls. So if you guys want to see that trade, want to come join some of the other trades and see those that we put on the markets as well today, check that out. Link down below in the description of this video. What the fuck? Well, that's not good. It looks like the power just went out. I mean, I was going to say, my son is teething, so it's been pretty difficult to make these videos without him talking too much. Oh my gosh, what is going on, guys? I'm probably just going to keep this in a video, because holy moly, I think the internet's out and all. What the heck? Anyways, this is not too uncommon to see weakness in the beginning of a year, in which if that year is an election year, you tend to see weakness in the first 3 months of an election year, but you also tend to see some weakness in the first couple of months in a year after posting a 20% gain the prior year. So 2023, the S&P gained about 24%. it's pretty common to see a pullback in the beginning of that following year. But then you tend to close the year up about 10%, and you do tend to see an aggressive rally, really Q3 and Q4 of an election year as well as a year after a 20% gain. So consensus is this is pretty normal for an election year, for a year following a 20% gainer in the S&P. And the rest of the year, the end of the year, should be pretty strong. Now, specifically in regards to Tesla, things could get a whole lot worse from here if the 50-cent trader is correct, if the VIX does spike, if we do see some downside in our markets. Tesla stocks guaranteed going under $200 per share, unless there's something crazy said on the earnings call that changes the market's perception around Tesla, around margins, and around future growth, which I think is highly unlikely that's going to happen, at least this upcoming earnings call. Well, Tesla stock could go much lower from here. So I think right now is a very good time to be saving as much money as possible, cutting back on things in your personal life to be able to invest as much as possible in a reasonable way, right? You don't want to be living off rice and beans. You don't want to be, everyone's different. I could live off of rice and beans, to buy more Tesla stock. That's just me though, right? I make sacrifices every single day to invest as much as possible. And I think that's a very prudent move for anyone else to do that wants to be able to buy as much Tesla as possible. If this situation gets really bad, Tesla stock could fall under 150. If we did go through some kind of big crash event, let's say there's a lot of recession fears that come about over the next couple of months, Q4 earnings really underwhelm, you could make an argument that Tesla stock, obviously it's going to bottom out and kind of trade sideways for a period of time, but you could make an argument that Tesla could just keep falling for at least a while. Now, I have made this prediction here on the channel many times. My worst case scenario for Tesla stock is around $200 per share by the end of 2024. That is if we either go into recession or get recession fears, and it's just a bad year for the markets. $200 per share sounds pretty reasonable. That would be basically no change from where we are. That might be a little bit more of a fall from here, but in the time being between now and the end of this year, you could go a lot lower than 200. Maybe you go to 150 and you rally to 200 by the end of the year. That's my worst case scenario though, and it seems like that's already starting to play out. My base case assumption is Tesla stock hits $450 per share by the end of this year. That only happens if we avoid a recession, if inflation continues to fall, and the Fed is able to cut rates 6, 7, 8 times along the lines of what the markets are pricing in. Now, you do tend to see, again, an end of the year rally in years when you get a 20% gainer the year before, so 2023, you tend to see a rally, which will be 2024 towards the end of the year. You also tend to see a very aggressive rally right before and right after the election does take place in November. So you could be setting up for a Q3, Q4 rally of 2024, whereas Q1, Q2 could be a little bit on the weaker side. Specifically, Q1 might make the lows for the entirety of 2024. I would not be surprised if that did happen. But where Tesla does see that rally to $450 per share, you either see an FSD licensing deal, you see the $25,000 vehicle get announced and some form of timeline for that. You see FSD entering China. Couple of these different catalysts coming together, and that's what pushes us to $450 per share. Now, if EPS comes in better than estimates as well, Tesla might be trading a lot cheaper than we think. Now, if you're a math guy and you want to put some real math on what I'm saying here, I think Tesla's EPS is likely to come in around $4.50 for 2024, and that would be with Tesla about 100 times multiple. And I think you get that multiple expansion as rates go down, as Tesla announces $25,000 vehicle, all those other catalysts, people start to price in a lot more future growth, and that's where the multiple really can expand to 100 or more, in my personal opinion. Now, if we get the $25,000 car announced and a timeline for that, I think Tesla could hit $600 per share. But that's not in my base case assumption. That's more of a best case assumption, and that would be Tesla stock could hit around $600 per share by the end of 2024. So I'm not changing my price targets. Nothing changed. Tesla lowered prices 6% in China, which if you factor in the increase via the Highland was about 12%, you're still net positive from where we were in September of 2023 when the Highland was introduced to the Chinese market in general. So not much has actually changed on that front. it was kind of a knee-jerk reaction because nobody expected Tesla was going to cut prices again. I didn't. And that does set us up again for more price cuts in the US as well, which is not great. But in the grand scope of things, nothing has really changed for Tesla. If you're looking at the last couple of months, again, prices are still higher for the Model 3 now than they were in August of 2023. Or September of 2023. So that's kind of what I'm thinking about right now. We do have some serious problems here in the near term, but I do think the back half of 2024 is going to be a lot better for Tesla stock. And I think this is your accumulation phase. This is the time where you can accumulate as much as possible to be able to buy as much as possible. You remember when Tesla was just $300 or $270 per share, $260 per share, and you're like, dang, if I could go back and just buy Tesla at $215, $220, I would buy as many shares as I possibly could. Well, your lucky day. Tesla's back at $218 per share. Let me know what you think about this video. What are some near-term, mid-term risks that you are looking at for Tesla? Are you bullish? Are you bearish? Let me know all of that information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.